Hello, everyone, and welcome back to the Real Money Talk. I'm your host, Erica Neal, and we are doing our Spotlight Member of the Month. And I'm really excited about today's guest because he brings a powerful combination of deep financial expertise and real world real estate success. I've practiced saying that many times because that's a tongue twister there. So this is Sam Morris, everyone. He is a partner at Lone Star Capital. He oversees acquisitions, asset management, and he does investor relations. He has been in this for over 20 years and has been a part of more than $550 million in multifamily transactions. He's got a strong track record of high performing investments as well as experience in the financial industry. So before joining Lone Star, Sam was the CEO of Sunset Capital. And before that, for nearly 2 decades prior, he was in corporate and investment banking, where he was involved in over $1 billion of real estate financing. So when I say that his knowledge is deep, that's exactly what I mean. He has the ability to combine financial discipline with operational excellence. And that is one of the things that sets him apart in this space, especially in this area of multifamily where this can go incredibly wide. So today, Sam, we're going to dig into your journey, how you built and scaled your businesses, the lessons that you've learned, and how all of us can apply that to our own investing and growth. And we're going to learn more about real people making real money. Sam, thank you so much for coming on the show. Welcome.
Erica, thank you so much. I really appreciate it. And howdy to everybody out there.
Awesome. Well, hey, y'all, like I said, this is a big deal. This is a lot to pack into one show. So make sure that we stay throughout the entire thing. Sam, I know you've got some visuals and all that we're going to dive into a little bit later on some details. But before we do that, let's look at Sam Morris, the man. So a little bit about your background and your journey. You spent nearly 20 years as a corporate banker working in the real estate transaction space, but before actually moving into real estate. What drew you into that shift? How did your banking background set you up to have the success that you have in the multifamily space?
Yeah, great question. Because right out of college, I went straight into banking, and it was kind of funny. What I tell a lot of people is, they say you got to have 10,000 hours to have mastery of a skill. And all I did all day, every day for the first few years of my banking career was do underwriting.
Mm.
Legitimately, all that I did. I know, it's terrible for a lot of people. Like
That's a
that's
personality
horrible.
trait. Oh my gosh.
For sure, but it's the way you cut your teeth when you get
Hmm.
started in that world. And so if that's the case, I was a master underwriter probably by the time I was 25.
Oh.
And what it did really was it gave me this unique ability to start reading numbers the way a lot of people read words.
Mm.
And so I could look at financials and things like that, and they would start popping off and telling me a story. I could actually start seeing the story of whether it be a property or a business, but whatever those financials were showing, I can actually start reading that and understand what was going on in the business. And so it's one of those things that I say it was tough going through it, in particular when you were young. Oh yeah. But what it did was it really set me up to have great understanding of all the things I was looking at, in particular when evaluating properties and then becoming a lender and understanding what it took to actually lend money to
Mm.
all of these properties and businesses and how to do that. And so you had to have kind of that background going into it. Even though I had the educational aspect of it, I didn't necessarily have the real world, experience that you needed to be able to do all those things. And so those first few years in banking really taught me that. And what was really interesting was that next step because I started doing deals for these guys that were making all this money in multifamily. And I was
Hmm.
like, my gosh. And I was watching how they did it. I could see how they were actually making the money. And so early on, I said, my goodness, I wonder if these guys would let me invest with them because I'm watching how they're making money. I can see how they're doing it. They present the business plans. I've seen this work over and over again. I want to start being an investor in this. And so I became a passive investor to start, like many people do.
Nice.
But I had the background of understanding the numbers of it, not necessarily the operational side of it. And so it was about 2007 when I started investing in larger apartment complexes and being able to get that flavor and that taste into that industry.
Man. Well, I love a couple of things that you said. The first one being that you can read numbers just like people read words. And I think that's really powerful because if we think about, I know we were talking about kids before we hopped on, and my youngest, we do our reading every night and all that. My oldest, she kind of functions on her own, but it's so funny that to watch kids progress, and it seems really, really difficult at first, but the best way to get better at reading and understanding and being able to retain information and process what it's saying is just by doing it over and over and practicing regularly. And so for you, just kind of baptism by fire, getting in there and doing so many hours heavily has made you literally literate in financial statements and underwriting. So that's powerful. And I would also say something else is, we when we talk about book knowledge versus real world application, college is a great experience and there's a lot of good things that come into that, but I think we all come out of college thinking we know everything and then we get in the real world and realize we know nothing. At least that was my experience. And that's true on two different types. So one, college, but also so many people are wanting to get into real estate and they're going to these classes, they're taking all the courses, they're reading the books, but at some point, you have to decide, hey, I'm going to get out there and learn, and I'm going to do this and learn with real tactical life experience. So those two things seem like they've played really well into your hands, if
Very
that's
much
fair to
so.
say.
Yeah. And so, and really what it was, because bankers are conservative by nature. I mean, we really are as a group. And so in 2007, when I made that first investment, which was a lot of money to me at the time, right? It really was, hey, I truly believe in this. I truly believe in this project, and I've done all the numbers, and I think I've underwritten every downside you can. So I'm going to go ahead and invest in it. And here's where that really became a another great learning experience for me. We acquired this property, I think it was in August, and in September, because we were in Houston, Texas,
Mm.
we had a massive hurricane come through and just destroy the property.
Oh
So
my God.
imagine that. Yeah, your very first investment into it. I thought I had underwritten every single type of scenario you can, and an act of God came in and turned a property that at the time was 100% leased to 12% leased overnight. Overnight, because it had destroyed that much of the property. And so I always laugh because I tell people you want to know, you really want to invest with somebody that has battle scars. Like you want to know somebody that has been there, done that, and gone
Yeah.
through the fire. Right? And so got my first battle scar right there. But one of the
Oh,
things it taught me is I started learning everything there was about insurance. I started learning everything there was of how you deal with contractors and things of that nature because those were not aspects that I underwrote when I was looking at the deal. And
yeah.
so I chuckle because, the way, I thought, oh my gosh, we just lost all of our money. A month into
Yeah.
the deal, I'm like, did I just lose everything I put into this deal? And what it really taught me though was how insurance works, how it pays to have relationships with certain contractors, and then understanding the business plan that you have going into it and what you're trying to accomplish. And so within about 11 months of us acquiring that property, we refinanced the property because we
Wow.
had gotten insurance and done everything associated with the business plan with the insurance dollars that we had. We made it much nicer than what it was prior to. So we had no problem getting all those residents back at premiums because they had everything brand new, appliances, flooring,
Yeah, they
right?
got to step up.
Very much so. And we were able to, at that time to do a refinance and pull 100% of our money out. So
Holy cow.
think about that. That was when I'm hooked at that point because everything we had put into it, less than a year later, we had gotten it back. And at those times, that was a really impressive thing. It'd be an impressive thing at any time, but we had improved the property so much in such a short period of time. And it took an act of God to get it there, right? So it's not a common thing. And the learning curve was steep at that point,
Hmm.
but it really became very real to understand, oh, wow, this can actually really work. I see how things work this way. And now I have more
Yeah.
knowledge of the downsides of some of these things and where it's important to operate, how you need to do those things. So it was really big for us and from a learning perspective at that time frame.
Oh my gosh, yeah. So like you said, it's not just okay, I understand the underwriting and all of that, but then operationally, what are the things that you're doing to prepare for not if, but I think it's realistic to say as you get more and more into investments, it's not if, but when bad things happen, right? navigating that. So, I mean, absolutely, that's a silver line, not even a silver lining. That's, what something that could be really bad turning into a fantastic experience and obviously making you a believer for all the right reasons.
For
So,
sure. For sure.
oh, I didn't know that story. I don't think that you and I have ever talked about that. What
Yeah.
a,
That was my very first deal, right? And so you go from
yeah,
that, you ride those highs and lows of that roller coaster, and it was in a very short period of time too.
man. And one of my questions that I was going to ask is what was the biggest learning curve? And so I feel like
That was a big one for
that's
sure.
a huge one.
And I can tell you since that time frame, I mean, I've dealt with now I mean, I haven't dealt with earthquakes because we just don't have those down here, but
Yeah, knock on
every
wood.
kind of natural disaster you can think of. I mean, we've dealt with from, floods to fires to, hurricanes to you name it, tornadoes. We've got them all. And so
Yeah.
to derechos, I mean, we've literally got them all down here. And just understanding all the aspects associated with that.
Yeah, no kidding. So really big learning curve there. What what was it that got you to the point from, all right, I'm working in the lending space, passively investing. You're obviously lending to these multifamily operators, see the success that they're having. So you decide, hey, I want a piece of that,
Yeah.
which is great, right? Like I think a lot of people the model for success has been built. It's been built by multiple people in multiple journeys. You just have to figure out which one you want to repeat, right? And so that's kind of the purpose of the show is, hey, just rinse and repeat the process in your own journey. But for you, what was it that when you're out there seeing all of this made you transition from being in the commercial lending space and the private banking more into, hey, I want to go and actually acquire and operate. I want to be on the operator side.
Yeah, so it was a couple things. One, I had started doing asset management of some deals, in particular deals that we've been involved with early. I had also seen that I had a knack for raising money. So I'd been raising money on the banking side. So I tell people I've been raising money since before it was cool. Uh, and in particular, before the Jobs Act was passed. So the Jobs Act got passed in 2012, I think, or somewhere around there. And when that got passed, that's when everybody was able to start going and raising money publicly. That's when you saw
Mm,
people on social media and things like that, because that's what really opened that up. Before that time frame, though, it truly was fully SEC compliant. You had to know everybody. It was handshakes. It was a lot of dinners. It was you figured out how to actually raise money on a very carnal level. All right, you were really just absolutely doing ground and pound. You didn't have the ability to go out there and push things like that out. And so, because I had some skill sets that were maybe outside of just underwriting and understanding that, and I knew how to
like having a
asset
personality.
correct. Yeah. But you also had to, I also had a good understanding of asset management at that point. And so when we sold my last bank in 2018, that's when I went full time into real estate. And so, and then since then, obviously, I do a lot of still things. Banking's hard to get out of my blood, so I do sit on the board at Texas Traditions Bank here locally, and so I'm still actively involved in that world. And I don't know if I'll ever get away from that world just because it's something that's still in my blood. But uh,
Yeah,
understanding the syndication world, understanding how to put the deals together, and then really having the understanding of how the deals operate and what they do, and bringing it all together in a holistic approach has been something that's been a key to the success that we've had.
absolutely. And being able to come at it from both, well, I wouldn't even say both. I would say from all three perspectives. You have the lender side, right, going to the money. You have the passive investor side. You know what the people who are contributing into the deal want. And now you're adding the assets and the operation of somebody who's in it. So the trifecta of a deal, you've checked all of those off of your list of experience, and now you're able to provide that to other people coming in.
Yeah, and
I
it's
mean,
yeah, and so like at Lone Star Capital, we're fully vertically integrated, so we have the ability to offer not just the on-site property management, but the asset management and the construction management as well. So all the management aspects that you need to actually own and operate the property, we handle all in-house, and so it's one of the great benefits that we have, and it's one of the it's really one of those differentiating factors between us and a lot of other groups.
oh, absolutely. Vertical integration is huge. And I've really seen, even in my investments and things that I've done, the groups that I've invested in, seeing the difference. is, I mean, it's becoming more and more clear in my investing journey as well as a lot of people I know. So I'll love to hear that. So actually let's kind of transition into that. You built up Sunset Capital. You were there as a CEO for a long time and it's merged into Lone Star Capital. Um, Obviously that was a transition into a bigger integrated platform. What's the biggest difference? What's something that you've seen? I guess the vertical integration. Is there anything else in the Lone Star world that you feel like has been able to provide more value and insight
For
for
sure.
investors?
The full vertical integration being the aforementioned conversation we just had right there. I mean, because that was a big deal. At Sunset, we were asset managers, but we didn't have the property management platform, and that's such a major factor for
Oh,
us.
huge.
But the human resource factor of it too. So we were a smaller group, obviously, when we were at Sunset, and we have over 200 employees at Lone Star Capital, and so it was a great thing because I needed a lot more of the people to help us get to that scale that we're looking at. And so that, and there's a lot of youth in the company. I'm getting a little bit more gray haired these days, and it's great to have a lot more team members that can help finish the task and the projects that we have in hand. And it's a lot easier to really be more of the oversight on a lot of those and watch and teach the people to execute the way that we need them to. So
Oh my gosh. Yeah. I think the team, people, the number one factor in any business, in any investment, in anything is the people. So you guys
yeah.
have a really good setup
And
on that.
that's really where I would say, is the great equalizer out there is that we just have great people. It really is fantastic. It was an easy sell for me to join up that way. I mean, we were fortunate. We had a lot of looks with a lot of different companies, and we chose to go with Lone Star Capital, not really the other way around. And so we chose who we were going to go and work with, and it was a great connection that way. And so we did that a little over 6 months ago. And so, although we hadn't acquired anything yet this year, we have a couple on the docket. And so we're excited and the teams are working really well with one another. So,
That's awesome. So let's talk about Lone Star. I guess kind of if you I know you've got some info and slides to share with us, but kind of give us the 30,000 foot view of who is Lone Star? What are you guys focused
yeah,
on?
I'll put that up here real quick. Let's see, we already went through that one. So I think I can figure out how to skip all this stuff.
In addition to all of these wonderful things Sam's doing, he's married with four teenagers all at one time. If you can
Yeah.
grasp that.
Yeah. Real estate's easy. Let's just say that real estate
Uh,
is easy. Four teenagers is difficult. So,
I have one right now, and I'm like one and a preteen, and I'm like trying to doggy paddle, keep my head above water.
I chuckle because that used to always be one of my lines is, real estate's easy. When you got four teenagers, there's
You're
never
not
a
scared
dull
of
moment in
anything.
life. I'll put it that way. There's never a dull moment in life. And so I always laugh because we have great team members, like I said, and some of them they'll vent to me about how difficult their week is going to be. And I just sit there and listen and smile and like, okay, I guess probably when I was your age, that was probably going to be difficult in my world
Yeah.
too, but I'd trade that
Uh,
any day right now.
yeah, how hard it is to have to go home and decide what you want to eat for one person or, just have a charcuterie board. Oh my
Yeah,
gosh. Yeah. It's all about perspective, right?
that's right. So, but real quick, I have this at a glance real quick. So the company was founded in 2018. The CEO is a gentleman named Rob Beardsley. So Rob's a very young guy too. Um, and he's, uh, I would say, hyper intelligent and fanatically disciplined. And so he's
Mm,
a great partner to have. And he's been, his focus more so is on the operational side of the company, and really overseeing our property management, making sure that and construction management, are working hand in hand with one another. And so our average annual return on our deals for the deals that have gone full cycle is over 25%. Our portfolio currently is about $750 million. We have
very nice.
5,000 units. All of them are in Texas. We do monthly distributions. And like I said, we had over 200 employees. We have zero losses and zero capital calls, which is a fairly unique thing in this industry right now. And part of that is because of the way we do a lot of our structuring. So we have a lot of what we call affordable, little a, not big A, where we've worked with local housing jurisdictions to bring abatement processes to the properties and the added affordability component. And because of that, we're able to abate a portion, if not all, the taxes on some of those deals. And we've done 12 transactions like that. So right now
Wow.
we have one of the biggest ones I like is we have 400 repeat investors. So, and those are investors that have done deals and actually come back and done another deal with us. So,
Yeah, just for them to be able to come back and have that experience and appreciate, right? Just the consistency. And I mean, I'll tell you, the zero capital calls, and you nailed it. In this time period, in this economic environment, that is incredibly rare.
yeah.
So wow.
Yeah, so here's a little bit of our track record real quick so you can see the assets that we currently have, which we currently have 22 assets, about to add at number 23. And so we'll be closing on Discovery at West Road next month. And so that's out here in Houston. The overwhelming majority of our portfolio is in Houston, Texas, which is where I'm located. Our corporate offices, as a side note, are actually in New York City. So
Oh,
our corporate staff is in New York City. I'm actually technically one of two remote employees, even though I'm down here, boots on the ground. So, um,
the
because I'm a
irony there is nice.
corporate staff, but I'm actually in here in Houston. So,
But you're the remote one.
correct, correct. And so most everybody comes and sees me. So it's really how it works out, which I
I
love.
love it.
So, but one of the things that we had talked about us being a vertically integrated company, when you have things in-house like property management, asset management, construction management, accounting, what a lot of people don't realize is properties and owning properties and managing properties is pretty fluid.
Hmm.
Rob and I could be talking about something, and right then and there, we can decide we want to go a different direction or we want to pivot and move this way, and it becomes policy right then and there. When you use third parties or other things and you're trying to get things done, it's kind of like a cruise ship, right? It takes a while for that to make a turn. Whereas we're more speedboat and we can actually make just turn on a dime to make the best decisions for our investors. And that's part of that hands-on approach that we have for the life of the investment. We talk about having a focused strategy, and all we do is multifamily housing. It's only in the state of Texas, and we have boots on the ground here and operational knowledge in all the markets that we invest in, right? So we're really in that for the overwhelming part, we're in the big three, so Houston, Dallas, and San Antonio. Leverage is
Awesome.
another fun thing for us. So, being an ex-banker, I have quite a bit of understanding of how that world works and what we're going to do and how we're going to do it long before we get into the deal. We have a pretty good understanding of the way that we're going to finance it, what those terms are going to look like, and what's the best interest for our investors. So, our newest acquisition that we're going to do, it's going to be right at about 65% leverage. And so there's a lot of downside protection risk when you do something like that. And it gives the investors a lot of comfort knowing that, hey, we have pretty low break even points at this point when you leverage it the way that we're doing it. And so in addition to that, we have what I would call white glove investor relations. So we do monthly distributions. You get really monthly updates and sometimes bi-monthly updates, so twice a month. And then we do a little bit more in-depth quarterly reporting. Um, K1s are out by March 1st, and we do have a less than 24-hour response time. So you asked part of the merger, where I was handling everything with our investor relations at Sunset Capital. We also have Craig and we also have Dasha and we also have Geraldine. We have a lot more people that can help us with that aspect to getting back to those responses for our investors and any questions that they may have. So,
That's so powerful. Especially, I mean, I think whether your deal's going good or bad, most investors just want that communication. But when we are in these turbulent times, getting those consistent updates, and I think you said bi-monthly, being able to hear from people. And for those of y'all that are listening, and if you're a passive investor, well, I would say both ends. If you're a passive investor, think about how often you're hearing from those that you've invested with. And on the other side of that, if you're a lead sponsor and you're a GP on a deal, how often are you communicating with your investors, right? Like this is something that is possible, and you guys have input the infrastructure, and the policy, and really just the company mindset that that's what you're going to do. And I would even add to that, the relationship is key, but then also the conservative financing, because how many people are struggling with those risky, overextended, we've got a lot of bridge loans. That doesn't mean those are bad, but when you're aggressive in that, it could obviously fester some issues. So you guys have really done a good job of tightening up on your operations.
Sure. So what I would tell you, structuring of the deal is actually what really burned a lot of people in the last few years. So
Yeah.
it wasn't necessarily that the deal was bad. It's just that the way that they had it structured. And, a lot of people will say, yeah, like that bridge financing or something that's from the devil kind of thing. And there's absolutely places for bridge financing.
Oh, yeah.
Um, and I can give you a great example. So we acquired a deal last year on a bridge loan here in Houston. We have since refinanced that deal, but it was actually part of the process. So 13 months into the ownership, we refinanced the deal and we did 45% equity pool for the investors. That's this year, meaning we paid them out 45% on their money that they invested last year. Now, part of the reason that it was done that way is because the only way we could have done that is if we had structured it with the bridge loan initially. But there was a process that we needed to put into the property to be able to do that, to get to that income, to then put it onto now long-term financing with an agency. And then we were able to provide a fairly large benefit to the investors in that deal. So the way that you structure a deal is very important in understanding why is another big deal. And so having somebody that has a good understanding of how financing works and things of that nature is really important because it can be just as detrimental if you go and put long-term fixed rate financing on a deal that you decide you want to exit in 2 years or 3 years. The prepayment penalty associated with those could be tremendous, and
Yeah,
you're leaving a lot of money on the table. And so there's risk in every which way you're looking at it. Um, so understanding that, it's not just the conservative financing, but it's understanding how that's going to work and how that's going to be structured within the deal is actually really important for the business plan that you have for each of
that's
the deals.
crucial. And I think, and Sam, I think my analogy, and anybody that I've talked to, like even on the infinite banking side, one of my favorite analogies is there's no good tool or bad tool. But if you cut a piece of wood in half with a hammer, it's not going to work very well. So that's true in the finance world, that's true in the debt space, in anything. So figure out what you're trying to accomplish and then use the right tools to get the job done.
Correct.
Yeah,
Correct.
I
So
love it.
yeah, and so one of the things that we talk about is the case for multifamily. Obviously, we're big believers in multifamily, and there's some fundamentals that we look at, and then there's some benefits that we actually really try to enhance or at least show what it is. And so, really, as this really is for Texas too, because that's just really where we operate, population growth being really something that's, heavily attractive for the state. And, being up where you're at too, I mean, Dallas and the DFW area, it continues to grow. I mean, it's
Oh
like
yeah,
new buildings are going up everywhere, new homes are going up everywhere. It's the same way down here in Houston. And really it's jobs, right? I mean, that's really where the population follows where the jobs are. I mean, and it kind of makes sense, right? If DFW is, creating another 50,000 jobs this year, there's a good chance that a large portion of those jobs are people moving to DFW to take those jobs, right?
absolutely.
So that's just how a lot of it works. It doesn't mean that they're moving from out of town or even from, out of state, but they're moving from certain areas to come to those jobs. The other thing is we do have a housing shortage. As much supply as we've been putting in, Dallas in particular, Houston in particular, they've chewed through the exorbitant supply that they put on.
Yes.
And so in Dallas and Houston, I could talk about really well because they are literally number one and number two in the country for jobs. I mean, more jobs that are being created in those two cities than anywhere else in the country. There's also a lack of affordability. I mean, you see it more, I think, and there's need for people that need good quality housing
Yeah.
at an affordable price. So we just have a lack of affordable housing. The cultural shift is a little unique too, because people are are starting to delay family formations, and so it's making more and more people renters longer. But the benefits
Absolutely.
is really what I like to focus on too, because in particular for us at Lone Star Capital, the monthly cash flow that we're able to provide on each of these investments, the appreciation, the forced appreciation that we do, the things that we do from a value add perspective that drive the values in each of our assets is something that we really focus on. Depreciation is something that's become more of a hot topic, and particularly with the new bill, the beautiful, big, beautiful bill that's been passed, and 100% depreciation has come back into play. And for those that rely on depreciation or need that to help offset other income, right, it's become a bigger avenue for them to look into more multifamily deals.
Yeah.
1031 exchanges are really interesting. So Dasha on our team, she's literally written the book. She literally has written
Hey.
a book on understanding, maximizing those values, the wealth that you can create through 1031 exchanges. She does it. I think it's maximizing wealth through syndicated 1031 exchanges is the name of the book. And she is a wealth of knowledge. And so our goal really is to, as we get through these deals, we just keep 1031ing them into the next deal. And so the taxes are never become an issue for any of our investors, and they're able to keep rolling, their investments as they go on.
Absolutely. So you guys are y'all are doing cost segregation studies for your properties, and you're
Absolutely
also open to 1031. Those are two of the primary questions we get, right? Are you doing cost seg and are you open to 1031? Because that's not something that all companies have an infrastructure to be able to handle. So that's a
correct.
big deal.
Correct. Yeah. And so we've done 1031s, we've done reverse 1031s, and I believe we've done 1033s. So I mean, we're a little bit more sophisticated in the ability to take on some more of those types of investors, and they typically are bigger check sizes too when we do
Yeah,
them. And so, but yes, I mean, we absolutely do cost seg on every deal we purchase as well. And so we have a fairly good understanding before we purchase the deal what that number is going to look like. So we're able to convey that to the investors of what their expectations should be prior to even investing in the deal.
very
And then
nice.
the last thing I was going to bring up, I know we had talked about this, was our bus tour. So we're doing a bus tour October 3rd of this year. And so there's a little QR code there as well. So if, really, if you're interested in just learning more, which, we tell anybody, before you really invest in anything, just invest in yourself, invest in your knowledge of it, understand who the people you are investing with, what the product looks like, what it's going to do for you. Does this align with your own investment thesis? Because a lot of people have different things they want to invest in, and we're definitely not going to be the end all be all to everybody, right? I'd love to say that we were, but there's a ton of different products out there. There's a
Yep.
ton of different types of real estate investing. And so, if somebody were to come to me and say, look, I want to do retail in Ohio, well, then I'm probably not your guy, right? But if you are looking for multifamily investing in the state of Texas, we think we offer something that's fairly unique and quite superior to a lot of our competitors. And so, this bus tour registration will allow you to come and meet some of our team members, come out to a couple of our sites. It's absolutely free. And you'll be able to, we'll feed you and take you around to a couple of the sites. We'll introduce you to some of our great team members and some of the things that we do when we take over a property and how that looks. So,
Oh, I love
um,
it. Well, hey,
yeah,
this is coming back to the very beginning of our conversation where you can read, you can listen, you can do all of the things, but to be able to see and experience firsthand what these properties look like, have conversations with the operators, with the asset managers, this is your chance to, get off the sidelines, get into it and start seeing some of this firsthand. And I agree, Sam, like you said, invest in yourself, and that means, you're putting in the work and you're learning. And I'm not saying courses and lessons and books, those are incredibly valuable. But being able to add some of this real world experience and investing the time to take advantage of an opportunity like this. I mean, you're going to learn so much just by seeing the property, hearing what other people have to say, and networking with other investors and with the team. So, I mean, if you're in the Houston area, I highly recommend you take advantage of this because it's going to
yeah.
be
I
a
mean,
good
look,
one.
it's free. You can come spend the morning with us, and you get to come see some sites and meet some people. And what's really great too is you get to meet some of the other investors that hopefully can give you their experience or their understanding of what it is too. And so it always helps when you're when you're looking for some of that extra validation to have to be around those people. And you and I know from going to conferences and things like that. I mean, that's just how you network and you're able to continue to expand your own network of people and what opportunities are out there.
Absolutely. I went to multiple bus tours when I was first getting into multifamily years ago, and it really did help, right? It was you can read and see and start to talk about things on a presentation, but to be able to apply it, and I'm a visual learner, so being able to see it and how those things actually trickle down into the actual asset itself makes a huge difference. And then also the idea of and talking to these investors and other investors when you're going to conferences and bus tours and all that, you start to kind of build your network and you start to build you have your own personal board of directors, right? That you can build that community and say, hey, what do you think about this? What do you think about that? What's your experience? You can leverage other people's knowledge and their experience and the time that you don't have yet, you can learn from them. And I mean, just people, you can't get enough of it. So, man,
Yeah. And what it
thank you for that
does,
offer.
absolutely, you know, what it does for us as operators, believe it or not, is it allows us to it allows me to brag on my team, right? It allows me to show off not just the property, but the people that work for us. And I'm always amazed that, inevitably whenever you do something like this, somebody will come and be like, wait, you mean there's people that just stay here all the time and work? I'm like, I got, 8 full-time employees that all they're doing is watching your investment here. Yeah, that's what we're doing. All right. And it's because we're servicing, it's a very real thing when you start going, look, I'm servicing 280 families
Yeah.
that live here. Like we actually are providing homes for, 280 families here, and I have employees that are servicing just the needs for those 280 families. And so your investment isn't just for return, which that's what we look for. Obviously, that's the number one thing we're looking for, but you're providing housing for
Hmm.
hundreds, and in our case, thousands of families across the state that we have, great responsibility to because we're providing them their homes.
Yeah. And to have that mindset, Sam, just kind of I think that is what translates into your success because that is what this is about. It's not, yes, this is an investment, but you are investing in the ability to bring, like you said, bring those home. So I love that you have that mindset because that's so incredibly powerful. It's not a, oh, gosh, I remember years ago, I was in the traditional investment space. I ended up leaving my investment firm and I was doing my own thing. And I don't do that anymore. But obviously, I've been a lot more involved, and I invest in real estate a lot. But anyway, I had posts about it, gone to some events. Anyway, fast forward, I bump into one of the guys that worked at the firm, the investment firm, and he was still there after I had left. And we were like, "Oh, hey, how's it been?" Just kind of catching up. And he looked at me and he goes, "So what are you doing now? Are you like a slumlord or what?" And I was like, wow, what a mindset to have. I was like, first of all, I know how much money you make because I made the same amount versus how much I make now, but that's not the point of this. But I'm like, the mindset that you have there is so off base. And when you really find the people that are successful and have a good track record and that these properties are really doing well, it's people that really love and care about what they do. And obviously, that falls in line with you. So this is not a run it into the ground kind of scenario. Which
No, it's not.
go ahead. I wanted to have a question on that
Yeah,
exact
I was
note.
going to tell you really, I mean, when we go to look to acquire a deal, and this will probably tell you a little bit more of the mindset. So, because I oversee obviously the acquisitions, the asset management, which integrates the business plan with the property management, and the investor relations side, which is our equity into the deal. I literally tell them we really got to take care of just a few people, but the first person we got to take care of is the resident.
Mm,
Because if we
hmm.
take care of the resident that's living in our facilities, they typically will pay on time, they'll take care of the property, and they'll make life a little easier for our on-site team. And then the on-site team is really that second group that we have to take care of, right? So that property manager, whoever he or she is, um, I'm giving them the keys to a multi-million dollar business, right?
Yeah.
So you have to understand, I mean, I have a property manager here and I go, here you go. Here's a $44 million business that I'm letting you run. You have support from me, but I'm going to do everything I can to make sure you succeed, right? Making sure you succeed, the person running this business, right? Everybody else wins. The
Yeah.
investors will win, corporate wins, everybody else wins in the deal if you take care of really those two main people. So I'm going to take care of my on-site staff and the residents. And guess what? Everybody else wins when you do that. So it really breaks it down into something a little bit more simple, but that's really what it is.
Yeah, everyone's goals are aligned at that point. We all want the best for the property and for the tenant.
Yep.
So what would you say there's two sides to this. What would you say are some consistent traits of the best deals, right? You've done a lot of transactions over a long period of time. So what are some traits that you see in some of the best deals? And then on the other side of the spectrum, what might be some of the biggest mistakes that you see investors or syndicators making in the multifamily space?
Yeah, they're not actually dissimilar answers, believe it
Oh,
or not.
okay.
And one of the things that you will be able to consistently see, because, and I'll preface it with this, I've seen great deals become mediocre with bad management.
Oh my God, that is so true.
I've seen bad deals become pretty good with great management. And so, as much as you want to you harp on of those different traits of things of that nature, when you have a group that is fully vertically integrated and has the ability to put the time, effort, talents, and resources into the deal to make sure that it's going to operate to its very best of its abilities, those deals typically do much better. When you don't have that, those deals do not achieve as much as they're able to actually achieve. That's where you have a lot of disparity in the market. That's why you have transactions for a lot of cases,
Yeah.
right? And so, case in point, we're acquiring a deal right now, which one, we weren't even the highest bid. We just showed we had the ability to close.
Mm,
So we were picked by the seller to close it. But the seller has a note that's coming due a month after we close. So they have to close. They
yeah.
have to sell the property. The property is not in bad shape. They are using third-party management, but they have run out of time. They've run out of time and they're going to take a haircut because of it,
Yeah.
right? It doesn't mean that they were bad people. It doesn't even mean they bought a bad deal, right? It just means they didn't have the ability to operate it in a manner that it needed to go ahead and keep moving forward with that deal. And
Yeah.
so
That was
because of
like
that, they're going
the
to lose, right? And I wouldn't say that they really lost because they actually operated it well. But there are things like that when managing the deal that unless you have somebody who's consistently watching it like that, it's harder to win sometimes.
And it's like that speedboat analogy that you use when you're having to go to your third parties and wait or negotiate or, see what's in their company policy or whatever. It's like you said, turning that cruise ship versus you guys, I mean, it's a direct line of command.
Correct.
So if Sam says this, if Rob says this, whatever, hey, this is what's happening now. And it's that immediate adjustment to get it done and get it done quickly,
Well,
which
not only
in
that, so yeah, when we were doing just asset management at Sunset Capital, right? We would meet up with our operation teams weekly, which isn't bad, right? Every week we would get updated. Well, here we meet up with them every day and multiple times every day. So
wow.
the volume of understanding what's happening and in real time significantly increases when you have it in-house.
Wow. I didn't realize, man, that is a lot. Oh my
Absolutely.
gosh.
Yeah, our asset managers are talking every single day and sometimes multiple times a day to all their properties. And so we're heavily involved with what's going on and we can make those adjustments. So,
That's huge. So we'll kind of have like a Sam sandwich here. We talked about you and then a little bit about Lone Star. We'll kind of wrap up with you. What would you say you've built and scaled Sunset and were able to build it to a point where, hey, you had the option to choose what company you wanted to merge with and moving with Lone Star, as well as working throughout your banking career, still sitting on the board. What would you say is the hardest leadership lesson that you've had to learn in the process of scaling and building a company?
yeah, and it's tough for a lot of CEOs too, I would tell you this, because we run it at a level that's that's higher is probably easier to say that. I mean, our mind is constantly on what we're doing. It's constantly moving that way. And there is no days off or anything of that nature when you get to that point. And so a lot of times that translates into that's the expectation of the people I have around me. Um, and when you deal with a wide variety of people, they also have lives of their own that aren't
Hmm.
necessarily on the same scale as yours. And so it's understanding some of that because I always tell people, in particular with our asset managers, we have high IQ asset managers. And when you typically have somebody that's of high IQ, they typically have lower EQ. That's not a knock, it's just the way it is, right?
Yeah,
And
absolutely.
our on-site staff is typically going to be a little bit different. You're going to have a lot more higher EQ people. They have the ability to relate with the residents, and they have the ability to understand and empathize with what people are going through because they're in that kind of people business. It doesn't mean that they have low EQ. It's just they're not necessarily the super high IQ that a lot of the asset management group is, right? And so it's understanding that you have to have a blend of both when you're in that leadership role. You really have to have, and sometimes you have to gear down the way you're thinking to go, man, let me feel it the way this person's feeling it. Let me understand the way they're hearing it, the way that I'm speaking it, and make sure that we're truly on that same page because communication is where everything breaks down.
Mm,
It's where
hmm.
everything either breaks down or it thrives. And so um, you're really having that in tuneness with your teams and understanding where you are and where they're at, more importantly, to be able to articulate and convey the message that you're trying to convey.
Yeah, that's hard enough to do within your own interpersonal family and then even
Sure.
extended family, right? When you all have some similar backgrounds, to bring that into a corporate space where you have 200 plus employees from all different backgrounds, family dynamics. I mean, yeah, that's incredible. And like you said, being able to blend that, but when it's difficult, but when you can, oh my gosh, it's like that Gino Whitman, he talks about rocket fuel, right?
Yep,
Two different types, and you bring it together, it's absolutely explosive.
very much
So
so.
that's fantastic. Where do you see yourself and Lone Star over the next 5 to 10 years? What are those goals that you guys are setting out to accomplish?
Yeah,
What do you
it's
want to
kind of
map out?
funny. Rob and I even talked about it a little bit more today because we think more in terms of years ahead. And a lot of staff is going to focus on what's right in front of them, but um, I kind of see us continuing to grow. I mean, we've shown that from a syndication model, we're going to be pretty successful this year, more successful than a lot of what our competitors would be. And um, not many of them can raise the way we can raise right now, but a lot of that is we put a lot of the effort in and we put a lot of the groundwork in to do it. And so continuing to build our platform that way, continuing to kind of stay focused in our niche, right? Because I think that's when a lot of people start getting into a little bit of trouble. We have one
Yeah.
other market outside of Texas that we would actually consider right now, which is the first time we would even consider moving out of Texas, but it's because we have great knowledge in that market.
Mm,
I think people get in trouble when they start having what we would call knowledge gap, and they go into markets that they don't truly know as well as they think they do.
yeah, they get
Um,
that shiny object syndrome where they're like, "Oh, I'll try this. Oh, I'll try
very
that."
much so. So strategic growth and in a manner that, you know, is appropriate, but I'm much older than Rob, my partner, and I'm much older than a lot of the other staff. And so to me, I'm having a lot of fun doing what I'm doing right now. And so this is a lot of fun. We're growing a business together and it's been a blast so far, and I can see us continuing that path. But as we look down that line of what's kind of next, I mean, there's dollar amounts that we can get to, and that's great. And a lot of people like to measure it in AUM, and a lot of people like to measure it in dollars raised or how many units you have. And frankly, I really don't care about that. I care about returns to the investors. I really
Hmm.
do. And so it's, I don't care if we're a $1 billion company or if we're, 100 million or less or whatever. I want to make sure that just the returns that we're giving to our investors are something that they can write home about.
Yep.
Um, and so no matter really how big or small we are, um, there's always going to be somebody bigger and there's always going to be somebody smaller that's just as hungry, if not hungrier, and trying to take it from you. So
Yeah.
you got to just keep running and and understand that, the markets change and you got to be able to evolve with them um, and have fun while you're doing it because we have a lot of control of our own little ecosystem.
Absolutely. And that's why you have over 400 repeat investors, right? Because you're focused, right? They see that you're giving them the value and they want to come back for more. I love it. Do you have any particular books or podcasts? I'm a huge Audible junkie, so anything that you think is a must read or must listen.
Yeah, it's so funny. A lot of people ask that. I'm a pretty avid reader. Um, and there's a lot of different great podcasts out there. And this is part of that educational process, but I do a lot of stuff on myself, right? And so I read Atomic Habits every year. So that's the very first book I'll read every year because it's one of those things that, it literally sets you up for making the right decisions each and every day. And I call it stacking wins. So when we as a company can start stacking wins, however big or small they are, it really, everybody starts to feel it. Right. And so it's one of the things. It's so funny. Rob and I were talking about it today because I said, "Hey, man, we're stacking some wins right now, and this is the momentum is growing and it's big." In the particular thing we were talking about, I said, "I really do feel good." And Rob was even saying, "Yeah, this is actually potentially freeing me up to do a few other things." I said, "Because we're stacking wins, right?" And so when you're winning, you can have more is available and open to you. But I'd be remiss if I wouldn't say the Lone Star podcast because Lone Star Capital podcast that Craig does and he puts it out all the time, and different subjects, different things, but really geared towards those investors and fund managers.
Yeah.
But it depends. I mean, uh, I chuckle because the last several books we read that I've read, they haven't been real estate related at all, right? And so,
I think
uh,
a majority of what I'm the same way. I'm like, I can listen and I get a lot of real estate, but getting some of that outside personal development is
yeah,
huge.
yeah. I mean, so we just finished building a story brand 2.0, which is literally how to tell your story, right? And actually making, the reader, the end user, the kind of the main character of the story when you're building up marketing and things of that nature. Um, I recently read Hillbilly Elegy, which is actually the story of our vice president, JD Vance, which if you haven't read that, you'd be stunned that he's our vice president of the United States. I'm more stunned that he's our vice president than Donald Trump is our president. I'll put it that because it's really interesting read of how somebody grew up from a very different background to truly make it. I mean, he's got an inspiring story.
I love it.
Um, I did just read Chase the Lion. Actually, one of our fund managers uh, just sent that to me. That's by Mark Batterson. Um, oh man, there's so many of them. So many of them that are out there that I could think of. Good to Great, Jim Collins.
That's a good
Uh,
one.
oh yeah. If you have, I mean, there's a lot of just great stuff out there. Leaders Eat Last, Simon Sinek. So there's a bunch of books that I like Jocko's stuff. So Extreme Ownership. So if
Yep.
you actually
I
like
had to buy
any,
the hard copy of that one. I liked
yeah,
it so much.
I met him a couple years ago. So we
Was it
were,
when we were in Charlotte? Because I think you and I crossed
yeah,
paths. Yeah, I remember that. He was at that.
yeah,
I remember that.
we got to meet behind stage there. So it was, yeah, great times. I mean, I like a lot of his stuff. He's fairly intense though.
Yeah, he's not, I don't think he's as intense as oh my gosh, the other one that is like hardcore. I can't think of his name off the top of my head. Anyway, I'll think of it later. I'll be like, oh
The
yeah.
most intense guy I met was Andy Frisilla. He's the one who does 75 hard.
Oh, okay. I was thinking David Goggins. That's what I was
Oh
thinking of.
yeah. I haven't
Yeah.
met him. I know he's got a lot of great stuff out there too.
Yeah, I haven't met him, but I listened to his books and I like the one where it's they read the book and then they kind of do like the off like podcast interview style. And so you hear him live and he's just as hardcore as he is in the book. So
Yeah.
yeah, it worked. Well, awesome, Sam. Let's wrap up. Thank you so much for coming on and sharing all of this. I mean, your story, your experiences, and your insight, right, into what investors should be looking for so incredibly powerful. Let's finish off. What is a go-to mantra or quote that you really enjoy or that speaks to
Uchi
you?
Mantra or quote. Um, ooh. There's a bunch. Let's just use the one I used earlier. I would just say, as you stack wins, I mean, the picture shows itself, right? So keep
Love it.
stacking wins.
Awesome. Well, thank you so much for coming on. Everybody, make sure that you get a chance to follow the Lone Star Capital podcast. If you want to hear more about what Sam and his team are doing, they're going to have some great insight for you. Reach out to Sam. Make sure you get registered for the bus tour coming up on October 3rd. I can even put a link to Dasha's book. She's talking about the 1031. I mean, if you guys are wanting to learn more about this, there's so many resources that Sam has. So we're going to put all his contact info out there as well. Sam, thank you so much for coming on. Everybody, we'll see you next time. Until then, keep it real.
Thanks, Erica.
At Infinity Investment Strategies, we teach investors and business owners how to become the bank. In using the infinite banking strategy, you can lower your taxes, increase the control you have over your own money, lower your risk against multiple wealth eroding factors by adding additional layers of asset protection, and increase your leverage with guaranteed growth and the opportunity for dual rates of return. With authorized infinite banking practitioners with experience in business and investments, we are here to help enhance your portfolio.